The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to diverge just a little bit today, and we're going to talk about cycles. We're going to go down memory lane. 49 years ago, folks, James Hurst came out with a book called The Profit Magic of Stock Transaction Timing. It was a blockbuster book by McGraw-Hill. It cost $8.95, and it was very, very popular. What happened during that time was a promoter named Ray Frechette got a hold of Mr. Hurst and said, you know, we can turn this into a service, and people will buy this because they want updated timing of these things. Now, remember, this is before computers. I mean, we didn't get computers on our little laptops, or we didn't even have laptops on our computers until 1983. So that's 13 years before that. Data coming in was very sparse. The only place you could get your data was through Bunker Ramo or Reuters. There was no Bloomberg. And most of it was by ticker tape from the Board of Trade and the Merck. That's what I used. So it was all brand new stuff. And they had this big seminar in San Francisco, and I went there, and that's where I met John Hill. I'd already known Jake Bernstein and Larry Williams previously. I met them in 1966, so I knew who they were, and I knew Peter Eliades even before then, because Peter was a good friend of Eddie Horowitz, who was my buddy and my attorney, and all these guys are still trading. However, let's get on for just a little bit here. Once this idea came about cycles, it became very popular. The cycles that Hurst worked on, he had 8 principles of his cycle theory. Commonality, I'm not going to, they're posted here into the Tiger Den. And if you want a copy of what I'm talking here today, if you'll email me, I'll forward it on to you. There's other ways of getting this kind of stuff, but I did spend some time putting together. If you do want it, it's up to you. Just send $1,000 by check. That's a joke, folks. Anyway, the 8 principles work. I'm not going to go what they are because some of them don't work. Commonality, they shift. The one on the bottom works the best. That's variation. Nominality is a good one because that usually means there's a 16 or 18, 36-day cycle that we see, but the problem is it shifts back and forth. Proportionality certainly works. The problem is Hurst didn't know Fibonacci numbers, and he never put that in the book. In his second book, which was the Cyclotech book, which was a service that I'll go into in just a little bit, that didn't cover Fibonacci numbers either. Harmonicity, we know what harmonic numbers are if you've listened a little bit here. Summation is an interesting one, but I believe that that's based on astrologically. And cyclicity, that means that there's cycles. There's no question about that. But the whole principle of cycles, what's really worked. And the reason why I'm going through this right now is because Jake Bernstein is going to be doing a seminar for the Foundation for the Study of Cycles tomorrow between 4 and 6 p.m. Pacific time. And I suggest you go and listen to that if you can. It's free, and it's something that's very, very good. So when Hurst brought this book out, there was very, very little information on it. I personally liked it because the fact that there's so many important people there that day that they were looking at it very closely. And I had known Peter Eliades for quite some time, and I'd seen his cycle work back in 66 and 67 when I first moved to the Los Angeles area. And so I got to know Peter relatively well, and he still uses his stock market cycles today, which is very, very important. Now, let me just give you an idea of what the things looked like when you got them in the charts. They were delivered by special delivery every Saturday morning, and they would have the updated prices. These were all commodities. They were doing nothing in stocks at that time, and it just showed you some of the things. You can see the things. These were not Bollinger Bands, folks. These were Keltner Bands. This was long before John Bollinger was even trading, I believe, because he's quite a bit younger than me. But those were the Bollinger Keltner Bands. The Charles Keltner was the man who originally developed that, and then you'll see the nesting of lows and things of that. These were the things that were on the charts that you were what you were looking for, but there was not, you know, any type of Fibonacci numbers. You can see the moving averages were there and stuff like that. Fibonacci was not even popular until 1978 when Prechter came out. I think he came out in 78 or 80 in the Elliott wave. Other than that, very few people even talked about it. John Hill introduced me to it in 1970, but you know, that's neither here nor there. Here is actually what the real bulk of the cyclotech stuff was. This is the thing that got everybody's interest. I'll put this up here so we can take a look at it. You'll notice here that you see all these little on the bottom, and then on the top you'll see these cycles that are put in there. And what they were looking for is, you're looking like on the top chart, you're looking at these semicircles. It's showing that there's a 40-week cycle, an 18-month cycle, and other things that are there. And then on the bottom ones, you're showing a shorter time frame, the 80-day daily. One was a weekly, the other was a daily. And you would look at these, and you'd be looking for cycles to come in during these times. This was what they called the nesting of lows or summation. Well, between 1971, when the service started, through 1974 or 75, they worked like magic. And the reason why is the markets were all bullish. It was during the Russian grain robbery, and things went, you know, ballistic, especially starting in 72. And bottoms were easily, you know, 18 to 36 days in length, sometimes 9 days between bottoms. But they were making those nesting of lows because the market was continually going higher. After in 74, but when we had the crash of 1974, everything changed. And the problem with the cycles that they were looking at is that they were static cycles. In other words, 8, 16, you know, 8, 16, 32, that type of thing. That's not what cycles are. Cycles are, they're living and they're vibrant and they're vibrating all the time, and they're shifting either up or down, and that's where the whole key comes in. And so this is why it was it stopped working, and then shortly thereafter, I believe it was 1975 or 76, it was all over, and they were no longer in business, and they were charging a lot of money. I don't remember exactly, but I think it was close to $250 a month to get the things by special delivery every Saturday. And you know, they had a lot of people that were doing it, and it worked for quite a while. And then it faded. But the foundation of for the study of cycles was still there. But we're going to go on to some of this other things to where I think where we are and where we're going. And, you know, this is just a history of it. I hope you realize that things have changed a lot in 49 years, and that's something that we really need to pay close attention to. By the way, folks, I just thought I'd alert you right now that the Dow Jones Industrial Average has just made the ABCD pattern coming off of the December 26th low. That was at 24,520. Oh.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to walk through slowly some of the things that I used to do back in the old days when I was doing the cycle stuff. By the way, Mr. Z just talked about working with Peter Leides in 1988. Peter was the only person back in 1970 that even knew what Fibonacci was, except, well, John Hill did, of course, but the people that I met. Larry didn't know, Larry Williams didn't know, neither did Jake Bernstein. They weren't using it, but if you know, the fact that these guys have, and Peter's still around to this day. I mean, he's got, Peter Leides has the most elaborate data for the Dow Jones Industrial Average going back into the 1940s. And it's a scroll, folks. It's actually about 4 feet high, and it's on a really heavy paper. And he actually charts the Dow Jones Industrial Average by hand on this parchment. And I spoke to Peter just before the holidays, and he's still keeping it up. His son, George, is trading with him now, and he still keeps the thing up even though we have all the computers and things. So he really did know the stuff. But anyway, you'll notice on this particular chart here, we have lows, that little nominal cycle. That's what they call a nominal cycle, 29 or 30 days. It goes to 60 days. And you'll notice on the third repetition, it doesn't work. And that's because it's shortened up to about 24 days because the market started to accelerate to the upside. Those valid trend lines were valid because they made cycle lows exactly on Fibonacci numbers, but Hurst never brought that to your attention. He was using Keltner bands to show you that they were in a standard deviation of a mean to get to those prices. So this was long before we were using any of this stuff. We didn't have stochastics. We didn't have MACD or any of that stuff. No, most of that stuff didn't come till after 1983. When Tim Slater and CompuTrack started to bring all this stuff out. Anyway, that's what we were looking at when we were watching these. I'm just going to walk you through the process here because I think it's interesting enough, and it's we're going to be seeing if that is going to be the case. Now, since we were looking at the valid trend line, I wanted to just to show you what that valid trend line looks. And here we are with this E-mini S&P right now. In fact, it's moving way above the 1.618 this morning, which is not unexpected because we didn't even back off last night. But you can see the valid trend line where it hits the 61% retracement through there, and you can see the ABCD patterns. And now we're way above uncharted territory. Now we did complete that big number in the Dow Jones. Whether that means anything or not, remains to be seen. But the patterns, none of this stuff has changed. The cycles are still there. They're just expanding. And all I'm going to do is to try to show you the development of where cycles are going and where they're coming from. I will do natural gas a little bit later. We're at a big ABCD in natural gas down at 320. I think it hit 324 earlier this morning. I don't know where it is right now. I'm too busy, but we will check on that, just a little bit later to see how some of these things are going on. Now, this is what happened with the Cyclotech and why it started to get really difficult. If you'll notice here, you'll see that we have these 71-day cycles, 142-day cycles, 214-day cycles, and inside those you have a 24, 48. Those are the cycles that are in. These are called summation cycles. Like if you look at that 2014, you have the sum of the 72 and the 144s coming in together, and that's it. But the problem is they shift back and forth. And as the market moves, they only work for about 2 repetitions, and that's all. During 1971 through 1974, they would go through 3, 4, 5 repetitions because the market was going straight up, and easily. You could see how the market was going higher, ABCD type format. So that's why it was so interesting, to see this stuff working. But then after 1975. I think it was 1975, 76 that, that's what really happened. Now I want to shift gears just a tiny bit here because at the same time that Mr. Hurst wrote his book, there was another book written by a man named William Garrett, and he wrote a book called The Torque Analysis of Stock Market Cycles. It was published by the same, hold on, let me get this up here. I want to get the diagram so you can see it. It's a little small, but those of you that know me have seen this before. I would blow it up, but I'm going to blow it up anyway, just to give you an idea that you're seeing Fibonacci stuff. I didn't get the clear picture that I wanted, but this is just to give you a taste of, some of the stuff that we worked on. This was from Garrett's book. Now, they had a lot of things in common. They were both engineers. Garrett lived in Hawaii. He was a retired Iowa farming family. He never farmed, but his family did. And but that's what he did. The books were published by McGraw-Hill in 1970 when it came out. The one book was Hearst book was $8.95, and the Garrett book was $29.95. In 1970, it was a lot of money. So they only sold 200 copies. They originally printed 5,000, and this picture that you're seeing right here was in the book on page 89. And I used to hide money in my books in my library. I'd make a couple extra bucks playing poker or something. I'd put a couple $100 into a page, and I put that into a page. And then one day I was looking at the book, and $100 fell out, and I was laughing to myself, and I saw this diagram. And so I printed it out, and on a thermofax, I sent it to Bryce Gilmore in Australia. This was 1989. Yeah, 89, I sent that to him. And at 1:30 in the morning, Bryce calls me up, and he said, "Where did you get this picture?" And I said, "Oh, it comes from a book that I got from a guy in Las Vegas named Astro Willie many years ago." And he said, "Tell me the story." And I said, "Well, this guy, I was helping a guy set up a Forex trading operation, and the only guy that was making money in there was this fellow about my age. And he would sit there and watch the prices go up and down in foreign exchange, and then he would go in and put an order in, and he was right a lot more than he was wrong. And he had me over for dinner one night, and he wanted one of my books, a book by Henry Wheeler Chase, and he said, "I'll give you any book in my library trade you any book in my library for that book." And I looked up, and I saw that a lot of the stuff that I'd already had. This is long before I was doing a whole lot. But anyway, what I wanted to do, this was after Drexel, so I had a big library of stuff. Anyway, I saw this book and Profit Magic, or excuse me, the Torque Analysis Stock Market Cycles. And when I reached for it, he said, accept that one. He said, I can't trade with that one. I said, no problem. I don't want it. Yeah, no big deal. Let's go on with the next thing. He said, wait a minute. So he traded the book for me, and I got it. It was so intense that it's way over my head. I understood Fibonacci, but not that much. Anyway, I'm talking to Bryce at 1:30 in the morning, and we're going to have a break here, and I'll have to finish the story here. Hope I can finish this. Yeah, I will be able to. I'll cut some out if I have to. But anyway, Bryce said, I want to see this book. And I said, okay, I'll send you the book by registered mail. He said, no, I want to see it today. And I said, the only way I can see it today is to copy it and fax it to you. He said, yes, that's what I want you to do. I said, Bryce, do you know how much that'll cost? He said, have I ever asked you for anything? And I said, no, sir, I'm on my way. This is 1:30 in the morning in San Luis Obispo. I go down to the college where they had the 24-hour thing. I copied the whole thing, and I faxed it to him on thermal paper so that he would have it the next day. And stay tuned for Chapter 6. 877-976.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to continue the story. Bryce asked me to fax him the book, Torque Analysis. I did. The next day, probably 18 hours later, he had read the book, And he said, do you know anything about the guy? And I said, well, he was a broker for Walston and Company in Hawaii. And is he still alive? And I said, no, I know he passed away because that was something that I had noticed, I think it was about 10 years previously. But he said, is his wife still alive? And I said, I don't know. So we went and searched, and sure enough, long story about that. But anyway, her name was Clarice Garrett, and she lived there right on Ala Moana Boulevard. And I called her up, and she was very pleasant. And I asked her about her husband, and she said that when he passed away, I said, did he trade very much? She said, oh, he never traded. He studied the markets. He had a tremendous library of really rare stuff from Egypt. And she said, I said, what happened to the books? She said, well, we gave them to the University of Hawaii. She said, but they told me that they were all stolen the first week. These were, I guess, rather rare books. And I asked her, she told me a little bit about him. He said, he came from a very well-to-do farming family in Iowa, so he never really had to work. His whole idea of working as a broker at Walston was to take care of the family money, and he did. And they did very well because she lived in a double apartment there up in a penthouse on Ala Moana Boulevard. And I said, do you ever come to California? She says, well, I haven't been there in about 15 years, but I have a brother there. So I didn't say anything. I talked to Bryce, and he said the reason why this chart on page 89 was so important is because it solved the problem of how to square a circle. And that was based on the ratio of 1.12. And as you know, many times I've been talking to you here that Bryce Gilmore is the #1 guy for Fibonacci and sacred geometry. He has no equal. There might be other guys that imitate him, but nobody else can do what he does. And anyway, Bryce said maybe we could get her to California, so I called her up. I said, "How would you like to come to California? We'll pay your fare and everything, and we would like to tell you more about, what's about your husband and stuff." And so we did. And anyway, the book, just never sold very much. They sold 200 copies out of the 5,000. And it was really quite good. Now, the reason why I want to just move, I've got to move along a little quickly here because I'm not going to get it done very much. But the reason why those static cycles don't work is because the market expands and contracts. And if you'll remember, we have a young man from California, previously from California, that comes on our show. And his name is Stan Harley. And if you'll notice, this is a dynamic cycle, not a static cycle, but this is the dynamic cycle that you're looking at in stocks, and you'll see how the expansion and contraction works, and that's what Stan is doing as he's going through this, looking at these different sequences of numbers. That's really, really what it's all about. Now, I'm going to just get a couple more here to let you, to see the type of the work that Stan does. You've seen it before because he's our guest, but these are dynamic because they're expanding and contracting, and they do that by Fibonacci numbers, and I frankly think they're related to the spirals of the golden ratio, but that's way beyond my pay grade, so I'm not too excited about worrying about that. So those are the main thing. Now let's get down to one other thing that I wanted to mention. Let's get this last one in. We already got that one, and I did one other. Here's one from Stan on the Case-Shiller index. It shows the same type of cycles, the same vibratory or harmonic stuff that you're looking at right here. And then we'll be able to come up here. There it was here. Oh, okay. Okay, there we go. All right. Anyway, that's what these cycles look like. I'm just giving you a rough idea. Now here's where I diverged here. I lost interest after 76 when I was working at Drexel because I was working with 20 men and I was just using A, B, C, D and Fibonacci numbers and trading gold and silver and stuff from the long side. So that's neither here nor there. But what we're going to be watching here is what happened next. And then I got involved in the astrology a little bit. That was started in about 1976. 20men had been involved in it a little bit more, but we had always dabbled at it because we believed that the cycles were astrological. Now, the big break for me was back in 1986 when I met Dr. Ruth Miller, and we started writing the book, and she started showing me, these astro cycles a little more in depth. I'm still at a depth of about 1/4 of an inch, so I haven't, gone into it very much because it's a little scary to me. and I don't understand it a lot. I have some guests on there a whole lot smarter than me, and that's what I'm looking at. But here's where I'm looking at cycles. The big break for me was when we were studying the market in 1974, that we noticed that there were a lot of cycles that were due in October of that year and in December of that year, and that was the double bottom. The Dow was around 500 at that time. It had been 1,028 in 1972 or 73. It topped and came down into the crash of 74, where we had these multiple conjunctions and oppositions. That's where they locked up together. So that's where the starting of the book, Astro Cycles, The Trader's Viewpoint, was to see what happened when we had these confluence of cycles coming together. And that's what we look at sometimes. But let's take a look at going back a long time. And I want to show you here, this is 1932. This is July of 1932. And you can see all of these cycles are lined up on one quadrant of the transit chart. That means there's a lot of things happening. You can see they're all lined up in these three quadrants. That means there's a lot of cycles coming together at that time. That was the bottom of the stock market, folks. July 5th, 1932, when the Dow hit either 41 or 42. Basil knows the exact number, but that's what that's doing. So what happened when we got to 2009 and we had that giant ABCD 3 drive to a bottom pattern, what we did is we looked at what was happening in the sky, and look at this. This was the same type of thing, only there we were on March the 5th of 2009, with almost all of the cycles lined up in two quadrants. And that tells you that there's just a whole lot of things happening at that time. So that's what you're trying to do when you're looking at that. So that's how the astrology started to work. And from there we look at the Bradley and all the other stuff. In fact, if you look at the Bradley model, you'll see what we're looking at today is the fact that we're right over this. This is as of Friday, and you can see we said the market would top this week, and we're already we just made, you'll see the 61% retracement there at 24,005 change. That's the 61% retracement in the Dow. And you'll notice that ABCD pattern that we've been looking at. We've been waiting for this ABCD pattern to complete in the S&P at the 26 and change level for quite some time. The bottom that we made, if you remember, on the New York Stock Exchange Index was a spot on 61% retracement, right on the money. And so that's another one of what we're looking at here. So the reason why I spent some time here is because the cycle information that Jake is going to give us, Jake Bernstein is going to give you folks tomorrow between 4 and 6 Pacific time, will probably be new stuff, because the foundation for the cycles has been taken over by some people, Larry Williams, Jake Bernstein, Tom DeMark, Dr. Richard Smith, and others, and they're going to give you some great information. It might be a way, and it's going to be probably very, very cheap or even free. That's my guess. So anyway, that's what we're looking at. We'll come back and we'll look at some charts and we'll see what's going on. 10.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, getting back to the market, one of the things that we want to be talking about, of course, is this, we have this lunar eclipse coming here on Monday. We have a holiday on Monday, and that is a super moon. I posted the information there that you can take a look at it. Shows you how the moon goes through all these cycles. Remember, folks, back in 670 BC, there was a man named Pythagoras, and he already knew that the Earth was round, and of course he followed the moon. He knew that the exact distance to the moon to the Earth was around 250,000 miles. He was also the first man to use the square roots of numbers, and he was a very smart fellow. Anyway, these things are all related to nature, even the stuff that we're looking at in the stock market. The $64 question is, you know, how high are we going to go? I wanted to just take one quick second here to review where we are here with the S&P, because we're considerably higher than what we were looking for. Here is the pattern that we were waiting for in the S&P. If you'll notice that we had the ABCD structure came in at the 2625 level. The 61% retracement came in at 2623. Excuse me, that was 2635, not 2625. The 61 retracement was 2623. We stayed there. We broke 25 handles down to 2598, and then yesterday we exploded. We're almost to the 78% level now, but we've completed the ABCD pattern. We've gone a little above it, but if you'll look back here, back in November when we were making the ABCD, we also did the same type of thing. So this is we're at a major turning point. The $64 question is, how much higher is it going to go? So you probably want to wait for a reversal type bar or something like that. Remember, from the 17th of January through the 21st of January, we have as many as cycles that you can have coming together that you can possibly get. If you remember that diagram I showed you from March 5th of 2009 and the other one from 1932, it's very similar to that. Now, that might not move the market, but I'm just showing you what the pattern and, you know, what the numbers are saying. And remember, caveat emptor, you know, buyer beware, because I'm not 100% sure this is all going to work the way I think it is, but that's the way it looks at. I shorted at 26.23. The market went down, you know, 25 handles, put the stop at break even. I thought it was, and I was off yesterday, and so I didn't have any idea that it was going to do what it did. But, you know, break even is like kissing your sister, and I love my sister. She's a sweetheart. Anyway, that's the main thing. Now, one other thing I wanted to talk to you about, and that is the lunar cycles, because this is corn. And if you remember, Norm Winsky said, if you have no brains, trade the grains. What you're seeing here is the lunar cycle of the full moons and new moons. If you look at the bottom of the page, you'll see the dark red dot. That is a new moon. If you see the circle with no color in it, that means that's a full moon. And then the other ones are, of course, your half moons and quarter moons. So you'll notice that within a day or two, these market tops near full moons and new moons. Does it do it all the time? No, but it does it a great deal of the time. So that's either here nor there, but pay attention to that. If you add some patterns and ratios to it and things like that, it could possibly be very, very helpful. One other thing about the astrology and the predictions and stuff, if you remember, we had Tim Bost on a couple of weeks ago, and he was looking for the market to be going higher into this time frame using astrology, and you can see the numbers that he's looking at here. He's looking for a peak to come in, the second week of February, and maybe that's where it's going to be, but it's had an upward bias since, December 26th, when we made that perfect 61% retracement, on the New York Stock Exchange index. And we also made some really serious ABCD patterns in many of the other patterns, the composite and the E-mini. And in fact, the E-mini, you can see here at the bottom, we were setting exactly at a 1.618 expansion with a, really nice ABCD pattern going way back to September. So that's a key thing to pay close attention to. But boy, it's amazing how the market has gone from extremely bearish on Christmas to happy days are here again, coming into this lunar eclipse that we're going to have here on Monday. Okay, the chart that we posted on for the natural gas, we did get down to that level of 320. The low was 319. It's bounced a little bit. Whether that's going to be a big ABCD or not, we won't know, but we'll have to pay close attention. Let's just see how we're doing here with the markets. Let's see how high we've been so far. And I'll get to gold in just a second. We've been as high as 358, and if I'm correct, we should start down here from about 26.54. We should be down for the rest of the day, but that's just a 10-cent guess, and you pay for it what you get. You pay 10 cents, who knows? The gold, folks, we have been in this really tight range in gold for 10 days. The low that we made 10 days ago came in at 12.78. The low today was 12.80. That's $2. I believe we're going to go down and take that low out, and it's going to go right around 12.77 to 12.76. That's the 382 retracement of the move since early January, back on January the 4th. So that's going to be extremely important support, 12.76 in the gold. So that's it. There's the price that I was looking for in the S&P, 26.54. Let's keep an eye on that one. Anyway, the gold is important because that's a 382 retracement. The reason why, let's just put it up here. I think we could even show you folks, I guess. No extra charge. We've only got a couple more minutes here, but we can certainly do it. There we go. And I got a few silly cycles in here just that I was going to put this for gold, but I never did. So bear with me here 1 second, and we'll get this up here. The important thing here is you can see for 10 days, gold has been at this really high level. That was the 61% retracement on the weekly at 1298. We hit 1300. And if we take out this low of the 4th, that would bring you down to the 382 retracement. And that would be our biggest retracement we've had since November. And if that 382 holds and we get strong, boy, oh boy, we've got a really big shot in the gold market to the upside. So that's the main thing that we're watching here. It's having a correction mainly because of that weekly chart that we've posted in here many times before. In fact, we've done it on the monthly too. We just should bring it in on the monthly because you'll get a better idea of the long-term move here in the gold. You'll see that, 1 second here. There we go. All right. And then you can see that's what we're watching here. Okay, that's neither here nor there. And then we move on to the next one. We got a break coming up here in a minute. Someone's asking a question about the natural gas. And let's just see where the natural gas has held that low or not. It has. I'll repost it so you folks can see it again. Well, it's actually rallied to about $600. That's old natural gas. It keeps jumping. There's no question about that. It's the pork bellies of the energy complex. Okay, so we went down and we hit the exact 1.618, folks. You can see it right there. That was at 320. And we rallied up to 328. We're trading 326.40 right now. That should be a major bottom in natural gas. Whether it is or not is anybody's guess, and we're not trying to guess. We're trying to calculate. We're trying to get our calculations correct. One thing for sure, make sure you have a wonderful day off on Monday. We'll be back here on Tuesday. Of course, we got another few minutes to take care of the rest of the show here, and then we will get back to work. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I wanted that first actually became my customer at Drexel, I believe, 79. He had a small account. He only put on like 3 trades. He bought corn once and he bought something else and was right on 2 of the 3. He really didn't like trading. What he really loved doing was to go trout fishing, and he retired from his engineering job and he moved up to Grass Valley in Nevada City. That's up in the gold mining area of Nevada, and he had a little house there, and he went fishing every day. I was able to introduce him to Ed Dobson of Traders Press several years after that, and they put together the Cyclotech program into a video program that they'd sold for $600, and he was very happy about that. He was a really nice fellow and led a great life. He died in his late 80s, and just a super nice guy. So anyway, folks, that's about the end of the show. I guess we're getting pretty close here. One other question that hope the audio's coming through all right. I hope it is anyway. We'll wait and see. But pay attention to these levels here with these cycles coming together, folks. They don't always work, but this is like it was at the bottom. Back on Christmas Day, you couldn't get anybody to buy anything. So we'll see what's going on with this. But those of you who have a chance, I hope that you get to listen to the Cycles program. And that's about it. So that's what we're looking at here today. Oh, one other question about the natural gas. We did hit that number at 320. If we go below 320, folks, that is not going to be a good sign because, you know, we've had a range today this week of 90 handles, and that did it twice. That means natural gas has moved $18,000 this week, up and down, $18,000. That would be the equivalent of more than 400 S&P points. When have we ever seen that? Yet. We will someday, possibly in our lifetime. So live every day in an attitude of gratitude and make God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!